Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Monday the 14th of June. Now into this session is fairly quiet handover from the Asian markets because there were a whole swathe of public holidays across Asia on Monday, so subsequently European markets are fairly quiet. However, markets are still digesting the big dollar rebound that we saw on Friday. Dollar really did take hold and the Michigan sentiment numbers really did help that move, but I think that the technical implications are going to be really important. Is this the start of a rally, or is it just another near-term pullback that gives you an opportunity to sell the dollar once more? So we're looking into that today. Now, with regards to the data points, we've not really got anything important today. However, tomorrow you're looking out for the retail sales, industrial production and PPI data for the US, all coming ahead of the Federal Reserve, which could give the Fed some pause for thought in terms of monetary policy. Now, at the end of this video, you've got the INFINOX support and resistance table for your trading levels. With regards to the charts we're looking out for today, major markets are being impacted by this dollar rebound. So we're looking at euro dollar today, testing that $1.21 level of support. We'll look at the implications of that move. Also for gold as well, big pullback early morning on gold. We'll look at how gold is testing a key level of support as well. And finally on FTSE 100, looking to test higher, breaking through to new multi-year highs on the FTSE 100, but is this a move that we're going to see sustaining? Let's have a look at these charts. And onto the INFINOX MT5 platform now, and what we can see is on euro dollar, where the market had been in this phase of recovery since the end of March really, but that phase of recovery has now turned into this corrective looking downtrend channel, lower highs and now lower lows forming, and we've seen that over the past few weeks, and it comes with the momentum indicator, the RSI, falling away under 50 now, which is the lowest it's been since that late March reaction low. And it's interesting, I'll show you here also the stochastics, which are corrective. They're falling away, testing the downside, the bottom of the Bollinger Bands, and also the MACD lines as well. That is a negative signal as well, and these MACD moving averages are not a million miles off bear crossing lower, so subsequently it does look to be turning a bit corrective near term on that euro dollar chart. So I think ultimately you're not going to be chasing this one lower at these levels, because I think it seems to be that you have the move to the downside and then a reaction higher. And looking on this 4-hour chart, we can see that we've just turned up from the 30 level on the 4-hour RSI, so we may well see another rebound that brings you back towards the 2150 area, maybe up towards 2190, 2122 figure. But ultimately, I think it looks to be on a near-term basis. Euro dollar is corrective, and we might see euro dollar drag back to the 20 figure area. But ultimately, I would still see that as a chance to buy it in due course. And watch that chart. And similarly on the gold chart, this uptrend channel that we've seen since the March low, and then subsequently taking the move that we've seen now turning corrective with the uptrend channel broken. We've got the RSI below 50. That again is the lowest we've had since April, mid-April, and again testing the downside support of that 1855 reaction low. Close below 1855 really does turn the market more corrective, and you could see that being dragged into the 1810 to 1830 support band. But ultimately, once more, I still see that gold is not likely to be starting a big downtrend phase. I think it's more of a corrective sort of consolidation part of that move that we've got on the dollar, which may see a dollar rebound, but ultimately only near term before further selling pressure. So I'd see this as a near term move. And finally on FTSE 100, well, I said in the opening comments of the report that it's a move to all multi-year highs. Well, it's actually dating back to February 2020. So not far off 18-month highs there, but ultimately it's in this uptrend channel and it's looking to break out. But are you chasing the breakouts? I'm not so sure, because you do get these strong moves to break out, but then you get the corrective move. You've had that a couple of times actually. You get the strong breakout and then the corrective move. So you've got the couple of candles in a row, which is a strong breakout, where the RSI then gets towards the 70 mark. Then you see a pullback. You're in the mid to high 60s now on RSI, so maybe not too much upside potential in that, but I'd be still looking at buying a pullback. This is the 4-hour chart, and you've got a good band of support now. 70.60 top towards 71.10 area. Good band of support there. I'd be looking for that as your buying opportunity area. So thanks for watching, everyone. I hope you found it informative for your trading. Join me again on Wednesday, where we'll be looking ahead to that crucial Federal Reserve meeting. So with that, I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.